service company, but they're actually a tech company providing financial services. So we're gonna let him tell you all about it. Welcome to the stage.
Thank you very much. And thank you everyone for having me today. As we already mentioned, the idea of this presentation is to give you a quick glance of what we do. Yep, okay, perfect. The idea is to give you a quick glance of what we do in Latinx and actually how we can implement blockchain technology into the things that we already do on a day-to-day basis. To give you some background and also perhaps to serve as a caveat, I am not an expert in terms of blockchain. My background is in finance. But about 3 years ago, I met Steven because we were shooting a podcast episode. And to be honest with you, he blew my mind with the things we discussed in terms of the technology that blockchain brings into the ecosystem. So ever since then, like 3 years ago, I started to do some research into the technology. And that required me to talk a lot with people like yourself, which are experts on the topic, but also with people on my side who are financial experts that are also looking into the technology to be implemented within their ecosystem. And something that I noticed is that most of the things that big players are doing, like NASDAQ, Euroclear, all the big financial market infrastructures, it tends to rely on the side of an experiment, but very little of these cases are actually seeing the light and being implemented, perhaps in some cases due to the ecosystem itself, in other cases due to regulation. So the idea of this presentation is to share with you what do we do here in Latinx and how we think that some experiments and some use cases related to blockchain can actually be implemented in a transparent and seamless way to the things that we do on a regular basis. Now, to get started, I need to first explain what we do as a financial market infrastructure. What is an exchange? What is a CSD? And this is the way every traditional exchange works. We happen to be a meeting point between investors and sellers. Sellers, in this case, companies that are being offering financial instruments, and of course, investors, people that have the money and are willing to put that money into work. This ecosystem works pretty much the same as a supermarket, with the only difference is that here we're trading stocks, bonds, derivatives, and so forth. And this concept is a concept that we believe will stay relevant for the next few years. Every company, to some point, will require to raise money, either in the shape of debt or equity. And every investor usually has that need or that requirement to get an extra boost in returns in terms of their savings accounts and the pension funds. So these concepts of meeting people who need money and people who have money, we believe will be around for many years to come. The only thing that can change is how we do this. For example, in the case of the Panama Exchange, back in 1990, we used to gather in a room just like this, and we will exchange the stocks and the bonds in a physical form. And you will be writing checks and exchanging the checks to settle the transaction. These days, we do that all on the cloud, and we will see that in a minute. So we do the same thing. We meet investors with companies, but we change the way we do it. That's why we mentioned before, we are a financial company where we use technology like from 25 years now to fulfill this core purpose. These are the services that we provide. We provide the entire value chain, all the way from listing, from telling the market what do you want to do. Do you want to raise debt? Do you want to raise equity? Which are the rules within your prospectus, or so to speak, the white paper which we will have in blockchain. We also handle the trading of these instruments, the actual buy and sell of the products. And we do something else which is called the clearing and the settlement. Clearing and the settlement is the exchange of the monies and the financial instruments among the parties involved in the trading. And we will see that in a minute because right now the way we do it is not very efficient, but still it works. Also, something that we provide is custody. I'm sure you're well acquainted with the term of custody here. What we do in terms of custody is very rudimentary, so to speak. We actually have a piece of paper in a vault, and then we create a digital registry on the cloud. That's what we call dematerialization of financial instruments. And of course, It's safe because we have the original at the vault, and it's scalable because we have it, the registry on the cloud. But if you want to grow as a market, you will have to increase the size of your vault. Otherwise, you will not be able to hold all those pieces of papers. So still works, but it can be improved. Now, when it comes to technology on the side of the exchange, we use top-tier systems. We have NASDAQ Machine Engine, which is the same software that is being used in NASDAQ in New York. And on the side of the CSD, which is the clearing and settlement and custody entity called Latin Clear, we use Percival, which is also used worldwide in many other markets. And this is important because since we already made a huge investment in these platforms, which are running on legacy technology, it's very hard for us to scrap all of this and then get into a new platform. So for me to go into a board meeting and tell everybody like, hey, let's get rid of NASDAQ, which we already invested millions for, that's not something that will sell. So the proposal that we will be sharing today goes along improving the thing that we have through the use of technology. So through the use of blockchain, sorry. So blockchain will be a complement to what we already have within these core systems of NASDAQ and Percival. Now, this is very interesting because as you mentioned before in the panel, usually when you want to invest, you face many hurdles. The first one being that investing in traditional markets can be expensive. Some people will tell you, hey, I need at least $10,000 or $100,000 in the case of Panama, and not everybody has that. So the open access to the markets these days are not very efficient in the case of Latin America. Perhaps in the US it's even better because you can open an account with, I don't know, Interactive Brokers or Robinhood for very low sums of money. But in the case of Latin America, it's not the same. This that you see here is a survey made to the biggest financial participants in the US, in Europe, in Asia that want to invest in Latin America and the Caribbean. And the question was simple. Tell me why you are not coming to Latin America and the Caribbean. Like, what is blocking you? What is impeding you to come here at a greater extent? And as you can see, 70% of the surveyed participants said that the main reason for them not to come into Latin America and the Caribbean is the high cost of regional variance. That means if I want to come to Latin America as a whole, I cannot do that. I have to go to Colombia, to Costa Rica, to Panama, and each of them will have a different regulation, different players, a different set of rules. And these markets are so small that for me to learn those rules, it just doesn't make any economic sense. Like I need to pay a team of lawyers and a team of compliant people just to understand the rules, and still I have the risk of not complying with one of them and getting a fine. So that's the main reason why these big investors, the JP Morgans in the world, the Bank of Americans of the world, don't come to a greater extent to Latin America. But they also see that the operational risk of being here is also a determinant that is blocking or limiting their investments in the region. So when we see this as an exchange, and this is something that everybody in the region knows, the exchange in Peru, the exchange in Chile, the exchange in Colombia, they all know this. But when we see this in Panama, we said to ourselves, okay, we not only need to make our processes work better, but we need to create a set of processes that will communicate to the ones of these international players. So we cannot create Panama rules or Panama processes, we need to create global processes. And within that idea, what we have been working on for the past few years is on analyzing how we can actually implement blockchain technology to the process that we already covered. As I mentioned, all the way from the listing to the trading to the custody, and of course the final settlement of the transaction, how can we make this process run better and with less harm or deterrent for our end client? Now, down here, you can see how the process works right now with the technology that we have with the NASDAQ and Percival software, and also the companies down here that handle that operation. So when you do the listing and the trading, you're handling the operation through Latinx, which is the exchange. But from the time that trading takes place all the way to the settlement, it takes 2 days. Let me put that in Spanish. If I buy or sell a stock today, I need to wait for 2 business days for my money to get into my bank account. And the reason why that takes 2 days is because in the middle, we have a whole bunch of people doing manual stuff, pretty much sending credits and debits to different accounts. Before it was T plus 3. Right now in the US it's T plus 1 because they got better on that. Here in Panama, we are still at T plus 2. So how can we make that time frame get smaller? We can use many other options. We can use AI, we can simplify processes. We have many other options. But one option that is key to this process and where exchanges are actually doing this already is using blockchain, using DLT technology. The one you see on top is the example of the Swiss exchange, and I will show that in a minute. The Swiss exchange is the only digital exchange, which was from the traditional finance of the Swiss exchange, to build an exchange running on the blockchain. And what they managed to do here is to eliminate the clearing process, which is pretty much knowing, okay, you owe this guy owes you. That process of doing the calibration of who owes what and who pays what, they eliminate the entire process because the trading and the settlement happens in real time. You don't have a counterparty risk, as I mentioned, as they say, sorry. Like, for example, if I buy a stock today, I need to wait for that counterparty to actually deliver the stock 2 days from now. Here, this doesn't happen. In real time, I'm sending the money and I'm receiving the instrument. So that's a great plus because now from 2 days, we go to an atomic settlement. It happens in real time. And of course, in the case of the custody, since this is running on DLT, you get to hold or have the custody on your own wallet of this instrument. The only problem within this value chain is that we do not have this right now a token that represents. Let me paraphrase that. We don't have a central bank issuing a currency native to the blockchain. We have tokens that represent currencies like the US dollars or the euros and so forth, and that's what they use right now. But at the end of the day, you had all these benefits of the blockchain, but you have to go back to the fiat system, which is, as you know, not very efficient. So in this case, yes, we have a promise of efficiency, but not the full thing because we have to go back at the end of the process and resort to the fiat system. Once we get a central bank issuing a currency native to the blockchain, that will be interesting because now this immediacy of the settlement of the transactions will have the full benefit that it promises. Now, according to McKinsey, when it comes to tokenizing assets, you have a wider range of products that you can actually tokenize and sell them in the form of a token. And as they mentioned before, you can even tokenize your kids. Well, here we're not talking about kids, but we're talking about the 3 ways that McKinsey sees in terms of tokenizing products. And the first one is within those products that trade on a short-term period. So your cash accounts, mutual funds and ETFs that seek a money market structure. That is that you want to buy and sell quickly and settle the transaction the same day, or as we call it, on a T plus 0. And also bonds and ETNs that also trade in a very short-term period. Then on the second wave, they see alternative products. And on the third wave, of course, derivatives and more complex products. For that to happen, more than the technology, what we need is to actually get consensus within all the players within our ecosystem. So you cannot have an exchange moving forward in one direction when your players, your buy side or your sell side, are not moving in the same direction with you. So we need to have them all on board on the same direction and get consensus in terms of what we are going to do. For example, on the sell side, on the side of companies wanting to raise money, the main issue right now is that they don't see the technology behind the process. When you are a company that wants to raise 20 million, you don't care if you're trading on an Excel spreadsheet or if you're trading on NASDAQ or on the blockchain. What you care about is getting to the investors and raising your 20 million. And then on the buy side, you don't care if you're holding the assets on the spreadsheet, on Percival, or on the blockchain. What you actually care for is that they are safe and they are available for you to trade them. So on these two sides of the equation, on the sell side and the buy side, the promise of adding blockchain to the process is not as big as the ones we can harness here as a financial market infrastructure. Because remember, from their perspective, they trade today, they wait for 2 days, that's it. The trade will settle. They don't see all the work that we do inside, which is expensive and inefficient. So the biggest reward right here is for us to be more efficient. Now, the problem with that is, of course, the upfront investment. We do not want to buy a new core system if we already have a good one. So how do you make that business case go through a board and through your investors? And of course, the other one is having something that will work with other ecosystems, that they can interoperate with other ecosystems. One that is very important as well is the regulation. In terms of regulation, at least for traditional financial products, my perspective is different from the panel before. I don't think you need regulation to start, but I do think you need regulation to make this big. And let me explain that with just a little example. For example, here in Panama, the exchange was founded in 1989, right after the US invaded Panama. And of course, it was a necessity for us because the banking system was not operating. We were out of $1. So what happened is that a group of investors, they decided to create an exchange in the middle of all of this. And then 10 years later, in 1999, we had the securities market law. So first came the exchange to fulfill the necessity of financing for companies. Then came the regulation to, of course, oversee and regulate whatever we were doing here. So to start, I believe we don't need regulation right now because this is technology. The concept of the instruments do not change. The concept of joining investors with companies that need money doesn't change. What changes is the medium that we use. But if you want this to be big, of course you need some sort of regulation. You need to have some rules. And the same happened to the exchange. Once we had our securities market law, you will see all the stats from the exchange: trading volume, assets under custody, number of transactions, everything tripled. And then after, when we have another reform under that regulation, it tripled again. So if you want to make this big and scalable, if you want the big bucks to come into the ecosystem, of course you need regulation. But if you want to start, actually there is nothing right now in the Panamanian regulation that can pose a threat for you to use the technology in this sense. Now, let me show you just two examples. One, which is this one, I believe is not the right approach to implementing blockchain into traditional systems. And another one, which I believe is a good example of how you can implement blockchain into traditional systems. This is the example of the Australian Stock Exchange. Back in 2017, they decided that they wanted to replace their entire core system for clearing and settlement for something that runs in the blockchain. And the first mistake I believe they made is that they went in full tilt without having a clear sense of what they actually wanted to achieve. So they wanted to create something that entirely run on the blockchain, but perhaps not everything needs to run on the blockchain. You can complement with other technologies. That's for the first part. For the second part, they were doing this in a country where back in the days, the technology was not well informed among the participants. So once more, if we go back to the first slide, if I am the exchange, I am providing a service to banks, to companies, and so forth. I need to know if I'm actually adding value to these guys and if these guys are ready to adapt to the changes that I am implementing. So I need to build something that works within an ecosystem where we can actually get along and work in a better way after we do the shift. In this case, it was the Australian exchange doing the changes because they wanted to be innovative, they wanted to use blockchain for this, but they never asked their participants if they were ready for this. They never asked if there was a real demand for these changes in the ecosystem. And of course, once you change things and if they don't go right, when they don't go right, your participants will be angry and they will be suing you for all the money they spend trying to get ahead with these projects. And that's what actually happened here. At the end, they invested $170 million for this project. It never saw the light. It never went live. And this is something that, of course, reminds us that we cannot go out and do an experiment of this size, especially in Panama with the size that we have, without tapping into our participants and without also considering the scope of what we actually want to achieve rather than how we will achieve that. Now, another example is SDX. SDX, as I mentioned before, is the only traditional exchange that runs on a blockchain. And in their case, they started in 2018, just right next to the Australian exchange. But the only difference is that they were operating from Switzerland. And Switzerland already had regulation for this. Switzerland already had an ecosystem of financial participants with the knowledge to adapt this new technology. And they also went in for something very specific at first. They didn't open the entire thing to all the instruments. They went in for bonds, the most simple instrument in the world. A bond is just an IOU. You give me your money today, I give it back to you X amount of years from now, I pay you some interest. That's it. There's nothing really complex about a bond. So they went in for something specific. They went in with the help of the ecosystem and also with the help of the regulator. So that's something that actually shows you that this can be done in a traditional sense. But of course, it requires help from many actors within the ecosystem. And in their case, they invested $165 million. The only difference is that, of course, it worked. Right now, they have been able to trade $1.5 billion in digital bonds. It sounds like a lot, but it's not a lot. Actually, you have like 100 trillion right now circulating in the system. So this is not a lot, but it works, and it's growing year over year. Now, where are we now as FMIs, as financial market infrastructures? You have right now two kinds of companies. You have the ones who are in the forefront of the thing, who are putting the big money into this, trying to, of course, capture a wider market and to be in a better position when this grows. And then you have the late followers, which I will say Latinx is in this category, where we know we will not have a bigger market share where this grows because we will be coming in late. But we do know that we don't have the financial power, neither the know-how to compete with these bigger companies that are putting, as you have seen, millions of dollars into these projects. Where we do see value is not on traditional assets, because I mean, we already do that pretty well with the systems that we have. And we believe that any improvement along that line, we can do it with traditional technology. But we do see a great case for alternative products. And let me give you this example, which we're actually looking at with the IDB Invest, with the World Bank Investing Division. And this is a solution for SMEs to get financing in an indirect way. A direct way is the SME getting into the market and asking for the money. That's perfect, but you need to provide financial statements, you need to comply with the regulation. It's costly. And of course, if you only want to ask for $20,000, it makes no economic sense. But what if you are an SME that provided a service, let's say to the Panama Canal, and you have the invoice of the service you provided, and that service is for $20,000. If you hold on to that invoice, you will have to wait 90 days or 120 days for the canal to pay you. But what you can actually do is to go on the factoring market and sell it at a discount. Now, when we did this in a physical form, it was easy. I have an invoice, I can write it down or put it in a vault or something. I can physically transfer that original invoice from point A to point B. But now that in Panama we have electronic invoicing, you can have the same document copied many times. How do you know that actually the copy that I have here in my computer is the original one? If I have a PDF with an invoice, I can copy it many times. How do I know this is the original one? Of course, you can go into the PDF and read the hash, which is like the fingerprint of the PDF. But how do I know that this hash is the last one? So a solution that we came up, actually we didn't came up with this. Someone in Peru came up with this and we are trying to replicate it in Panama, is that we can give the lender, or we can give also the company that is providing the service, a platform where they can register this original invoice in a digital form. And once that happens, this invoice will be first verifiable We will be able to timestamp the time at which this instrument was created. And of course, we will be able to track the ownership of that invoice from point A to point B or C. Yep, please. Yes, it has an invoice number, but once more, since it is digital by nature, how do you know that the copy I have is the original one or the last one? Because you can actually transfer it many times. So here is a matter of verifying that indeed I have the last version and the last verifiable version of the document. And of course, we can do that with blockchain. That's a perk. So here, what we're trying to do is to first provide an access, a friendly access for them to register the invoice. Second, to adhere any documents complementary to the invoice to give them all the documentation necessary for that. And at a later step, do a timestamp and also an electronic signature that tells you who has the final version of this. And of course, the final version of the document will be here at our loud and clear core under a register that runs on the cloud. So it's using the same structure that we have right now for our traditional instruments, but instead of taking a piece of paper, putting it on a vault, and doing the registry on the cloud, I will be capturing information digitally. I will be storing that to verify its nature and to guarantee this is the final version on the blockchain. And then I will be registering who's the final owner on my core system. So it's using blockchain as a complement to the traditional system. And once more, the product that we will be able to sell here, if I am an SME selling at a discount a $20,000 invoice, I don't care if this runs through blockchain, an Excel spreadsheet, or if we meet at the park and you give me the money. I don't care about that. I care that it works, that it is safe. But also on the other side, the buyer of this, they care that this works and is safe. So what we're selling here is safety, is being able to verify that this is the final version and who has, of course, the ownership of this final version. Now, just to wrap up, what's the path forward? As I mentioned before, this is not only a matter of technology, this is a matter of ecosystem. We cannot build something as a financial market infrastructure that doesn't work or that doesn't resonate with our participants. I cannot tell my participants to do something they're not ready for. So right now, for traditional instruments, we don't have a real demand from our investors or from our companies to change the entire system and run it through the blockchain. But we do have a real requirement from these investors who are telling me, hey, I cannot know if this invoice is the last version of it. And we can solve that through blockchain. So our proposal or our part forward as Latinx is to go along that way, to forget about how we are going to do the thing and to focus on why we're going to do the thing. We can do it, as I mentioned before, we can do it on a room like we used to do in the 90s. We can do it with legacy technology. We can do it with blockchain. It's not the how, it's the what that you do. In terms of regulation, as I mentioned, I don't see that regulation is necessary for this to happen. Actually, in Panama, right now there is a project law that is trying to distribute the responsibility of who regulates what. There is not a lot of clarity on this. And my last 10 cents of take on this is that regulators need something to regulate. So if there is no actual market first, they don't know what to regulate. They may have the openness of being innovative, of being at the forefront of regulation, but if they don't see the demand in the country, if they don't see participants like Latinx using the technology, there's no way they can actually come up with a solid idea of how to regulate the ecosystem. So I would like to leave you with that message. We are using the technology. We don't see any barriers for that along any of these variables, but we do have at the forefront the idea of providing value to the end user, either to the company that needs to raise money or the investors who wants to put their money to work. So with that, I would like to open for some questions from the audience. Thank you very much.
So I think it was around the third slide where you were showing the reasons why companies wouldn't come to Latin American markets. And I was looking into that recently, and I would actually like to ask you what would be the reasons why they would come to Latin American markets. Because as far as I know, it's a very young population. Everybody has a cell phone. Everybody knows how to use a cell phone. So it should technically, be a next hub. So what was the counterpart of that slide that you showed?
It's mainly returns. When you go to very developed markets, the returns are very slow. You can get still, for example, in Panama, you can get bonds paying 8%. You don't see that in the US these days. You can go to Brazil and get 12 or 20%. So it's mainly the return. They want to come here to get a greater return. They also want to hedge from their traditional investments. So if you have a portfolio which is 90% US and the US market goes down, of course, you feel the pain. But if you have a wider percentage of that allocated in Panama or in Brazil or in Colombia, you can hedge that volatility that you get from those markets. So it's mainly return, and it's mainly a hedging technique against volatilities in more developed markets. Yep.
One more?
Hey, good idea about the electronic invoices. I hadn't thought about that, but the question here is, since the electronic invoice is essentially a file, but the file I think is signed by the DGI, right? By the Dirección General de Ingresos.
Not signed, but they do have a registry of when they get issued. Yeah.
Yeah. So in theory, I can send that file to Latinx, and I can send that file to I don't know, the guy on down the street. Mm-hmm. So how can you check that this person has the correct invoice? Because I can copy infinite digital file, even if it's not signed, even more.
Yeah, and that's the point. You can guarantee you have the last version because it will have a stamp from Latin Clear, which is in this case the registry of the instrument. So once it has the stamp of Latin Clear, it can trade at the exchange. So first you need to register the instrument, and then you can trade it over here. And of course, fraud can be done even with the regular physical form of the invoice, and many people can do it. In the digital form, it's easier, so still you have the risk of fraud. But in this case, we will be preventing that because only you will be trading those that already have the stamp from Latin Clear. So these big participants, they will come into the platform and they will know that Latin Clear already put the stamp of this, and it only is valid if it has the Latin Clear stamp.
But that doesn't solve the issue of Latin Clear is part of Latinx, correct?
Yes, same company.
So it doesn't solve the issue that I can go to Latin Clear, and the day after and the day before, I go to another person and I sell him that invoice.
And that's the point I made. Fraud is still illegal, so you can still do fraud in the digital form. What you will not be able to do is to replicate the invoice that we have here with our stamp. You can go out and replicate the invoice without the stamp, and of course, someone will fall for that. But the invoice with the stamp, that's why we want to use blockchain for that. You will not be able to replicate that because we will be the registry, the sole registry of the final version.
Okay, thanks.
Sure.
Anybody else? You got one question? Oh, okay.
Yeah, I do have a question regarding, among the same lines that he mentioned before, how to make this more accessible for people in Latin America who wants to be an investor, but they don't have the amount of money to $100,000, $10,000 to make the first investment. And how do you see that blockchain can help people or organizations like Latinx to make this possible? I know that you're working in fixing something within you as a organization, the medium itself, and not the trade between both parties. But my question is, how do you see that this can be an option for people that don't have that amount of money to first become an investor?
Yeah, I would like to make two comments on that. And the first one, on the traditional form for investing, I'm happy to tell you that right now in Panama, you can open an account with some brokers for only $500. So you can access to that. The problem that you will face is that when you get into the market, you will buy a stock that is not volatile. It's not like in the US where you buy Tesla at 200 and it's right now at 278. Like it doesn't move that much. So the returns that you get in the local market for stocks at least is like 8%, 7%, around that. And for the bonds, the same, like from 5 to 8%. So if you put $100 to that, if I see it as me being the investor. If me as a private citizen put $100 at something that yields 8%, it sounds good, but 8% is $8 in a year. So that's not a lot of money. I'd rather use it for something else. The benefit that you get, for example, with the invoicing is that invoice trading provides you with 12 to 20% return. So now you're getting my attention. Now I can put my $100 and make 20 in a year. That sounds better. And of course, it's not that I will do just a one-time investment. I can be adding more money into it. And of course, my small amount will be compounding by a bigger return, and I will get something more interesting at the end of the day. So the traditional system that we have now, the products and the companies that we have now in the ecosystem, they just don't yield enough for the regular market to be interested in. Because they do the math, they see the effort and stuff, and they say, hey, this is not worth my while. That's for the first part. For the second part, people don't know these things exist. And sometimes they know, but they are afraid of fraud or losing their money and stuff. So they'd rather keep it safe, and they save it in the bank, and that's it. And they earn like 1% or maybe less, and that's it. So for me, it's not the access itself, it's the education, it's getting the people interested, because as for any here that is Panamanian, you can open a trading account in the US in minutes. And you can trade like an American and pay no taxes, actually, because that's a foreign source of income. So if you are a Panamanian and you are interested in investing, you can do it right away. It's super easy. But usually people don't do it because they don't understand it and they don't feel comfortable doing that sort of work with their money. But yes, I think we have to rethink the way we want to include people into the ecosystem. I cannot pretend to ask an SME to give me financial statements every 3 months. They don't even have an accountant sometimes. Imagine coming up with financial statements. And also for our people coming from other countries, an SME in Panama is making like $20,000 or $50,000 in income a year. So they're not really big. And I comment this because in Madrid, in Spain, they told me that SMEs are all the companies that have less than 1 billion market cap. So that's different sizes. Here no, our SMEs are really small. But yes, I think we have to rethink how we adhere those SMEs to the ecosystem. I believe we can do that through electronic invoicing trading, or factoring as they call it, but in a formalized way. And we can also do that for small investors, giving them access to these products that yields a higher return. So it's changing the vehicle, not changing the concept. Yeah, please. Yeah, please go ahead.
Yourself in Latinx?
Nope.
Well, what are you talking about?
No, when I
Factoring-
mentioned the return on invoices, if you take the average return on those invoices, it's anywhere from 12% to 20%. And remember,
You're talking about a factoring company that offers factoring that I can invest in, like this.
Yes.
The one that appeared for Tesa, that they almost go broke, or I don't know where they are.
Yes.
And they took everybody's money because they lost it.
but
also.
that's different. And also, Forteza is not the one giving you the money back. And let's get a few steps back, perhaps. The exchange is like a grocery store. We put the shelves, somebody comes in, they put the products. We are not liable if the product fits you well or not. We are just liable for making sure that the product complies with all the rules and regulation, and putting it open and in a transparent and secure way. On the other side, you as an investor, you also come into the market and you know that some products are not good for you or not. And you need to understand as well and have all the information available to you, the nutrition facts, the price, everything else, for you to make an informed decision. So once more, we as an FMI, we are just a platform. In the case of Forteza, and it's not that I'm trying to defend Forteza, but I know the guys and I think they're trying to do something good there. In the case of Forteza, it's the same. Forteza is the platform, and they get companies that need to raise money with investors that want to put their money to work. And if you lose money, it's not because Forteza stole your money or because they lost your money. No, it's because you gave your money to a company that didn't pay. And that can happen anywhere. Actually, here, if you have your money at the bank can go broke and you lose all your money. We don't have FDIC insurance in Panama. So it's the same. Every time within an economic transaction, if you put your money into a place you think you trust, and that company, for some reason, for fraud or for legitimate reasons, they go bankrupt, you lose your money. That's how it works. But it's not the platform itself that once it bears the responsibility of paying back to you, it's the company you invested in. Now, here with the invoices, what we're trying to do, learning from Forteza, is not giving access to the SMEs to the platform. It's giving access to the big companies that get products or services from the SMEs to get into the platform. So you will be buying an IOU, not from the small restaurant in the corner. You will be getting an IOU from the Panama Canal or from a big insurance company, or from a big bank company. So these companies, they have a better credit score, but you are actually helping the small company that gave the service to that big company. So once more, it's an indirect way of finance this small company, but through the credit quality of the big company. And our idea as the platform is to validate who enters or whose invoices enter this ecosystem, trying to perhaps protect you in a better way with the kind of products that you can buy as an investor. But yeah, the 20%, the 12% is never guaranteed. If someone guarantees your return, beware, because it is impossible.
I don't know if in Europe or other places it exists, but just to clear, the company that makes less than $120,000 a year here in Panama, it's a micro. It's not a small business. Small business is from 120,000 to 1 million. So I don't know if they even have these concepts in other countries because it's such a small company.
I don't think they have it. The one I'm telling you is from the Bolsa de Mercados Españoles, the exchange in Madrid. And they have a market segment for SMEs, for small and medium-sized companies. And the only requirement there is that you do not surpass a 1 billion euro mark in your market cap, which is huge.
Here in Panama, according to AMPIME, from $0 to $120,000 is micro. It's not even small yet.
Imagine, yeah.
So,
yeah. We have smaller companies than them. Yeah, sure.
Anybody else? No? Well, I have one for you.
Okay, perfect.
And account payables, right? This is what factories or trying to finance them. How do you think, since we already talked about tokenize and what the small company want is liquidity to continue operating. If I tokenize the business or the tangibles of the business or the product line of the business, and I can tokenize that and get liquidity, how do you think that will disrupt your business model?
I believe we are only an alternative of financing. So if you need $5, you can ask me and I can sell you a Yappy and we solve that. If you need $20,000 for a car, you can go to the bank and perhaps they will be the best ones to help you with that. If you need to raise 1 million, 2 million, 10 million, you can call the exchange because now you're buying in bulk. So I believe there is an option that fits better to you depending on how much money you want to raise. Of course, you can have a company that can tokenize their assets and they can raise a lot of money, but it's not different from coming into an exchange and complying with the rules that we have here on the international market.
The reason I ask is because it is more costly. Okay, we're talking about SME. These companies, they don't have a big margin profit. So when I sell that invoice, I'm actually cutting into because what I'm trying to do is shorten the time that I get the money that a big company does not want to pay me yet or can't pay me yet for whatever reason they have. I want to shorten that time, and that's why I get paid. Or I sell my invoice to this big company that then trades in your business model on Latinx. So if what I'm trying to get is liquidity to continue operating, I mean, what would I, as an alternative, what would I continue selling my accounts payables to that company that has the credit score or whatever?
Once more, you have many options. When it comes to financial instruments, you can come up with many things. And depending on what do you want to achieve as a company, you can, of course, seek that resolution through different mediums. In our case, we are tackling a market that usually is serving companies that will spend 120 or 180 days to pay them back. And these SMEs, when you do a project, let's say we want to refurbish the whole room, when you do a project like that, yes, for the company contracting the service, that's nothing. That's like 20Ks, 50Ks. But for me as a contractor, I put the money up front, and now I need to wait a lot of time for me to get that money. So that's how it works right now in the regular sense of the technology. What we want to achieve is for them to have a clearer path to how much they will be discounting from their invoice once they go and they do the factoring operation. Because right now, if I go to factoring company number A, they will say, okay, I will take a 20% fee or discount. The other one will say, okay, I give you 15, 18, and there's no way for you to know what deal they gave the guy before you. When you bring this into an exchange, you can have full transparency of how much they are discounting for Panama Canal invoices, how much they are discounting for $20,000 services. So you get the data, you get the transparency, and you can get a better deal because now you are an informed company doing the transaction. So of course, we will not be able to solve the whole thing, but it gives a great tool to these small companies that are actually trying to finance themselves in the short term.
All right. Is that it? Yeah? Let's give it up for Manuel.
Thank you
very much for your presentation. He's not going anywhere, so if you have any more questions, you can reach him. Great. Now, continue with our next speaker. We had him just a little bit ago. He's going to continue illustrating for us what real-world assets and in real estate. He has democratized the way that somebody, a private citizen, the average Joe, can access the market and regain his financial freedom. So let's give it up once again for Remy Jacobson, CEO and co-founder of Realty.
Hello, thank you. Nice to see everyone again. This is going to be a presentation a little bit more focused on Realty. We're going to explain to you what we do. Full disclosure, we're not raising money, we're not selling anything, we're very well funded. But let's go to show you what we did in the last 6 years and how Realty grew, where we came from. Just to give a little bit of history, in 2018, 2019, we incorporated Realty. Since then, Realty has grown to the leader in real estate tokenization. Next slide, please. Change the slide. Okay. So Realty has grown to the leader in real estate tokenization. We have tokenized over 2,000 properties over the world, units over the world. We have investors from 145 countries, investors, 20,000 active investor community of about 80,000 investors today. We built an ecosystem. We just didn't build a fractionalized platform. The idea of fractionalizing real estate is something that came with crowdfunding in the 2015 round, and it works very well. But you have a lot of issues with it. First of all is accessibility, transparency, and most importantly, liquidity. What happens when you do crowdfunding? You buy a share in a crowdfunding, you're stuck with the good or the real estate until the asset is sold. It could be 3 years, it could be 10 years, or it could be even more than that. You need to find a buyer. What tokenization changed is really the fact that you could buy in today, you could sell tomorrow, buy back again the next day. That's if you want to buy and sell. What can you do even more? You could take a loan against your token without putting a loan on the property. What do I mean by this? What's your name here? Yeah. Huh? Anibal. You have $100 worth of real token. You want to buy more real token because the idea is to accumulate, to grow it. So you take your $100 of real token and you go on our platform that is called the RMM. It's on our website. You take that $100, you deposit it as collateral. You will get a new token, which is called a receipt token. That token is stored in the same wallet that you had your real token, and you're able to get a 50% loan. So you have $100, you got $50. What do? You go on real token main site, which I hope you would do that if you took a loan, and buy more tokens. And you do it again and again and again, and then you have a snowball effect. It's called compounding. This is what investing is. You compound your investment. There is no such thing as a small return. If I have $100 invested and it pays me 8%, I get $8 a year. Yes, it's small. People rather buy a beer or chicken wings with that. But if you do $8 plus $8 plus $8 plus $8, and you're able to buy tokens and grow your real estate portfolio weekly, monthly, daily, whatever your means is, in 10 years, you're going to wake up and say, whoa, is that really me? Because real estate and real world assets have two effects. One is the yield. So you could buy for the yield and collect your interest. But most of the real world asset goes up in value throughout the years. You take real estate, you take gold, Bitcoin, real world asset today, it's based on energy. So those goes up in value traditionally. So you could look at your income based on the yield distributed, but you could also see it on the asset value. So you could see here, thank you. So Realty since 2019, those numbers are not accurate because as of this week, we're at $151 million in sales. We have distributed $29 million, this is an old slide, $29 million in rent so far in distribution. Sorry, I was messing up oh, it's much better. I was messing up the microphone. So you see $29 million distributed directly to the investors. What does that mean? Because it's important. Directly to the investor. The USDC, the stable coins, are dropped every week. Once a week on Monday, you get an email, your rent got paid. It's dropped to your wallet directly. That's if you're on Gnosis chain or an L2 that's cheaper. If it's on Ethereum, you have to claim it. The Gwei sometimes goes a little bit crazy. So 2,130 rental units sold. I think we're a little bit above that because those numbers are outdated. 20,000 active token holder, a community of 80,000 people. 150 countries around the world. This took us 6 years to achieve. And this was achievable only for one reason and one reason only. Realty's community. Realty's community is supportive, is engaged, and they like each other, they help each other. They allowed us to build the product. You could see the Realty dashboard, community dashboard, where you could track your investment. There is not one line of code that has been done by us. 100% done by our community. I need to emphasize. Each blockchain product, company needs a community and they need their support. You could see we stopped on this slide at 2023. But you see a little bit of our integration. In Q4 2029, we started Realty in February 2029 with a house called on Marlowe Street in Detroit, a $63,000 house. That house took us 6 months to sell. Then we met with the founder of Uniswap, and we were the first security token integrated in Uniswap. From that time, we went up from a 6-month sell to about 3 days. Today, we sell $1 million property and about $1 million would take us about 15 minutes on average. That property would be resold almost entirely within a few weeks on the secondary market and will be mortgaged by token holders within a few weeks as well, as soon as it's available on the RMM. When I mean mortgage, it's not the property, it's the token that you take a mortgage on. Property stays free and clear at all time. 2020, we went cross-chain. I'm not going to give you a whole history of Realty. It's self-explanatory. We're just missing what we did in Q3 2023 and 2024. 2024, we did the first tokenization of private equity, which was ourselves through a Swiss structure. Very interesting legal framework that we used to be able to tokenize Realty itself. Next slide, please. So you start investing. We covered this. Next slide. Next slide. Sustained results. Let's go back to this. What is a sustained result? Like Manuel said, anybody guarantees you a return on your investment, please run. It's a lie. Whenever you invest, you have a risk. Real estate, funds, whatever it is. Real estate, the risks are obvious, but a lot of people saying there is brick and stone. I'm not going to lose my value. You're right. You're not going to lose your value, but the tenant can go, and then you don't have income. the roof can collapse. You have to redo the roof. But the property value will remain as long as you maintain it. There's two rules in real estate. Pay your property tax, pay your insurance, and you should be okay. Do your management, of course, on the side. So you have all type of assets on realty to please any type of investors, from an Airbnb to a low-income housing to long-term houses, multifamilies. We're launching non-real estate product this Friday, which I think a lot of you are going to be surprised because I've been hearing a lot about it in this conference. Next slide, please. Collect rent weekly. So everybody's going to ask me this question, and I know because I've been doing this for quite a while. How on earth do you get rent every week? I don't. I get them every month. We distribute them every week. So there is 1 month behind that we distribute every time to be able to have a reserve. The reason why we do a weekly distribution, we used to do daily, but it became too expensive. The reason why is the secondary market. Because if you are going to distribute on the same day every month, everybody would buy token on the 28th, and on the 2nd, they would sell their token and do it again and again for collection. So having the token distribute weekly allows people to keep the token and have a better trading. Next. Our market today. So we are in a few states in the US. We have opened up Panama. As you see, unfortunately, Panamanian residents cannot invest in Panama for now. And we started our first property in Cali. Bogota and other cities are coming very shortly. This is our geographical footprint. We're working to expand Europe and other countries. The biggest issue is finding professionals in their market. Next slide. The Realty DAO, we created a token called the REG, the Real Estate Ecosystem Governance Token, the Realty Governance Token, the REG. That will allow you to A, participate into the DAO, take decision about realty and realty's future. It's a new product. It's a new type of DAO with some NFTs into it for rewarding and different part of it. I invite you to read the white paper. It is quite complex for newbies, but it gets much, much easier if you put it in ChatGPT. It will give you a synopsis that is really well made. Next. Introduction to the RMM. RMM is what I think is one of our biggest technological breakthrough. We were able to put real estate loans, liquid, available and accessible immediately to anyone who owns a real estate token. Simple. You go, you deposit it, you get 50% loan to value. Your interest rate is algorithmic. It goes up and down with the value of the liquidity pool in the RMM. So it works exactly like Aave for those of you who knows a little bit about DeFi. The YAM. What is the YAM? The YAM stands for you and me. Why is that? Because you and me, we could transact in any of our tokens. You want to buy one of my token? I want to sell it. We go on the YAM, we do it. I want to put an offer for my token. I put it on the YAM, somebody comes and buys it. Today, there is a very nice volume on the YAM, a very interesting liquidity on the RMM. I think the RMM is about $45 million available right now. And the YAM is doing a couple of $1 million a week right now in exchange. Next slide. Our investors. Who are Realty's investors? Investor number one of Realty, me. Number two, my brother. My brother is my partner. We're brother not by choice. I didn't decide that. My parents did that. But we are partner by choice. It's been 30 years we work together, and we've been building quite a few interesting business. Tim Draper joined us in 2021, I believe. He joined Realty at a value of $121 million. Since then, we had our PE on 2024, private equity raised $5 million at the valuation of $180 million. Realty today is not raising any more funds. We're looking for strategic investors. Thankfully, money is easy to get. Grayscale is much, much more interesting to us. If I could give any advice of any of you who wants to launch themselves in tokenization or in business in general, there's two things I could tell you. There is only one place where the word success comes before the word work. You know where that is? Anybody? In the dictionary. If you want to make it work, roll off your sleeve. Took us 6 years, sleepless nights of work, and still today, sleepless nights of work and going through it. Second of all, we're playing Legos. What is DeFi? What is blockchain? We're playing Legos. Don't be afraid to use each other's technology. Take it, use it. That's what we are, all open source. That's why we're DeFi. We could use each other's protocol and play with it and build even better. And that's the goal. Don't try to keep everything for you. Make it open source. It will be a much bigger success. Thank you very much. Oh, I forgot.
think we can get
Well, good afternoon, everyone. My name is Daniel Verano. I'm the founder of Dojo Coding. I'm also a DevRel at the StarNet Foundation. So I'm excited to be here. My second time in Panama. It's been great so far. And I'm going to be speaking about empowering developers, really just speaking about the importance of builders in the ecosystem. I'm going to do a little bit of storytelling on my end. Then I'll introduce Dojo Coding and how it fits into this bigger picture of onboarding the next generation of developer talent into the blockchain industry, which there is a massive, massive shortage. So I want to start off with that exact idea. It's the best time to be a builder right now. It's the best time to be building. We've seen a stagnation of crypto developers since practically 2023 was the peak. It's literally stagnant. This is a crypto, an electric capital report, and it's honestly a little bit alarming simply because of, how much demand there is for talent. So like, why is that, right? Why is there so many opportunities, so many grants, so many VCs interested in funding projects, but the amount of developers isn't constantly going up? We're in an attention economy. Maybe it's a matter of not properly communicating the opportunities within crypto for developers, but let's dive into that. But before that, I'm gonna speak a little bit about my journey. So I've always been in love with crypto, with the idea of decentralized finances. As many builders in the space, my start was actually with NFTs. I started buying NFTs in 2021, as many people. But then I started, diving a little more deep into the rabbit hole that is tech, right? That is the software engineering side of crypto. As some of you may know, in crypto, there's two sides of the industry, really. There's the speculative side, which many call the casino, right? It's the token side, speculation, prices of tokens. It goes hand in hand with the other side of the industry, which is the computer, the innovation, the technology, the software engineering side, where products are being built and customers are being acquired. And so that's where I found my place in the industry, in the computer side of things. But again, I had really no one around me that found their way in the blockchain industry, at least at that time. I was still studying in university. I was working full-time at a data company from New York, but I didn't have a blueprint. I didn't have people around me in my university who were also curious about the same topics. But I had a very strong curiosity and desire to learn more and, in general, connect with people at a global stage. And so that's what I started doing, right? I started breaking my own limiting beliefs slowly but surely, connecting with people online, chatting with people through Twitter, through Telegram. The barriers really don't exist anymore. It's very common for people to just focus in whatever local bubble they're in, right? With the same people, their same circle of friends, and really never breaking out. And that's kind of what I started doing. I had a lot of curiosity and the belief that I could go and build something way bigger. And my first step was really open source. So open source software was the turning point for me, because that's when I started contributing at a global stage. I started connecting and learning from experts from all over the world, from Paris, from Asia, from New York. And that was a really strong turning point for me. I found this platform, which I'm also an ambassador for them, called OnlyDust. OnlyDust, what they basically do is provide or connect funding opportunities from blockchain foundations with developer talent. And so at one point, I made an open source contribution, and I got paid like $500 for that. And that blew my mind. Because at that moment, I was still in university. I was still in the first phase of my job. And $500 was nuts for an open source contribution that I was doing out of just wanting to learn. I wasn't even expecting getting paid. And so that really was a change in mindset shift for me. And more importantly, I wasn't invisible anymore, right? I was present in the ecosystem. I was connecting with people. And open source software is what led me to go to my first hackathon. I went to a hacker house in Paris. It was my first time traveling to Europe. Out of nowhere, I was invited. A week later, I was on a plane to Paris. My first time ever in Europe. 2 months later, I was on a plane to San Francisco. 2 months later, I was on a plane to Istanbul. So open source software and more so blockchain development changed literally my life. It changed my mindset. It opened my brain to the possibilities that exist. Because when you're in those environments with people from all over the world, it's easy to be inspired and to feel like really there's no barriers to what's possible. And so throughout this journey, I discovered Starknet. So in the blockchain industry, there's a lot of blockchains. There's hundreds of blockchains actually. And specifically in the Ethereum ecosystem, you know, there's a lot of builders flying around different ecosystems, and one of those ecosystems is Starknet. Starknet is a layer 2 blockchain that's currently settling on top of Ethereum. And Starknet was that ecosystem that I decided to just focus heads down on. I found culture in it. I found people who had that same mentality of learning a tech that's literally just being built in real time, that maybe 2 weeks later there's a new version that breaks everything that was built beforehand. And that was very intriguing to me. Again, it's that mindset of surrounding yourself with people who are going to lift each other up, share knowledge, and experiment without fear. It's pretty crazy how willing and open developers are, and in general tech professionals are in this space to just help people. People are super open. At that point, I was sending DMs to like CTOs of certain projects, to even certain people at the Starknet Foundation, and they would answer. And to me, that was nuts, right? Because again, I come from a Web 2 Latin American background where maybe this type of knowledge sharing isn't that common. Why is that not so common? I'm not too sure. But this was a very big mindset shift for me, because that's when I truly found out that sharing knowledge and being abundant in the value that you can provide to other people will definitely always bring good karma. And so I just doubled down with that. But so I'm going to sidetrack a little bit. So what's Starknet? Again, Starknet is a layer 2 ZK rollup built on top of Ethereum. It's a zero knowledge rollup that uses Stark proofs underneath. What it basically does is bundle a bunch of transactions, generates a Stark proof that can then later on be verified in Ethereum. And so that's how Ethereum is currently being scaled, through Stark technology. There's a very interesting narrative right now for scaling Bitcoin as well. There's this opcode called OPCAT that could possibly enable the verification of Stark proofs natively in the Bitcoin script. And so what this means is there's a possible future, and that's one of the stronger narratives of Starknet right now, where Starknet can have dual settlement on both Ethereum and Bitcoin. So that basically means becoming a layer 2 Bitcoin as well. But I'm getting a little bit ahead of myself. So again, Starknet has its own programming language called Cairo. It's a Rust-inspired language. So it's used to write provable programs. It's provable software, right? Why? Because every program that you code generates a Stark proof that can later on be verified, right? So that's what a CK proof is, zero knowledge proof, where you can prove whatever you want without knowing what it is. And again, so I found myself immersed in what a blockchain ecosystem is. I started finding out that, you know, there's different use cases of the technology. Starknet specifically is a general purpose rollup. And so you can build games, you can build DeFi apps, you can build developer tools. And to me, this was very exciting because it sparked that entrepreneurial chip that I've always had on my shoulder. At one point, I believed that the only way to really get into the startup ecosystem and startup space was through Silicon Valley. That's where all the funding is. But the reality is that blockchain and crypto in general, it's truly decentralized. It democratizes the opportunities for funding, for connections, and for building global product. And that's what blockchain to me is at its core. It's the opportunity to become an entrepreneur at a global stage. No one can tell you otherwise. It's permissionless systems, and that's the beauty of it. But yeah, this is just a quick image of the current Starknet ecosystem. There's a bunch of different apps, and that's how I got my way into Starknet, just building, trying cool stuff, connecting with people. And then after, you know, a lot of community building that I started doing in Costa Rica, I ended up at the Starknet Foundation as a developer relations engineer. This takes me back to the central point that I've been speaking about, right? Blockchain needs builders. Blockchain simply doesn't move forward without developers. They're literally the architects of protocols. They're the ones who's going to build the products. They're the ones who are going to participate in the governance of these different chains. And they're the ones that bring trust to the ecosystem through the software that they write. But more than developers, we need builders, right? We need use cases, we need products, we need things to use, and that's going to come from builders. So developers need to become builders. Not all of them are going to become founders, but there's a very specific subset of those who are going to shine and who are going to thrive in this environment. And so there's a very important problem here that no one's really talking about. Most devs are stuck, not because they aren't good, but because they simply don't know the game that we're playing. Through Dojo Coding, which I'm going to introduce in a second, I've spoken with hundreds, if not thousands at this point of developers, and I know very specific pain points that people have. Many have spent years at a private software company doing the same things over and over again, sprint by sprint, and they simply don't know how fast the industry is accelerating in both in AI topics and also specifically in the crypto ecosystem. Many don't know what a grant is, what opportunities there are to connect with VCs, what opportunities there are to even get a job with a crypto protocol, or with a wallet, or with an exchange, or with an on-chain game company, because it's so wide, it's so varied, and you won't find these opportunities if you don't take those steps to expose yourself, to connect with people, and to really just be curious again. It always comes back to that, just being curious. And again, so the developer ecosystem isn't growing fast enough. We're leaving a massive Web2 talent pool behind simply because of a lack of awareness and a lack of information in the correct manner. For some reason, well, not for some reason, but there's certain developers have a very strong stigma around crypto. But we need to change that, because crypto, it's not just trading, it's not just tokens, it's actual real world infrastructure for the new era of the internet. So we need to change this graphic. We need Web3 developers to go up. So what's our approach? How can we do that? Enter Dojo Coding. So throughout my experience of traveling, for the first time abroad to different countries on my own, that expanded my mindset, that expanded my network, that expanded just my knowledge as to how you can actually access this type of opportunity. And I started sharing that. I started creating content online. I started talking with people, giving a little bit of mentorship as to how you can really get these types of opportunities. And that's how Dojo Coding was born. It was initially a support group. It turned into a movement. And now it's a system where developers can really just break through the noise and build something real. Right now, Dojo Coding is a community with 2,000 developers. We have around 160 who are paying members of a private section of the community. We expand around 10 countries in Latin America. Most of them are in Costa Rica naturally, because that's where I'm from. And exactly what I've been saying, we have a proven acquisition channels beyond crypto. Crypto is a bubble. Crypto Twitter and the developer scene is even a bigger bubble. But the beauty of Twitter is that you can connect and learn from people at the front line of innovation. But if you stay in that bubble, you're not really onboarding new devs. That's actually a really big pain point that many foundations and in general, many initiatives for developer onboarding have in Web3, because you always see the same people. It's always the same type of talent, and the initiatives and efforts trying to bring new people into the space sometimes suffer a little bit because they don't have these acquisition channels correctly aligned. And so that's our specialty, right? We step out of crypto Twitter, we go to Instagram, we go to Facebook, we go to YouTube, and we create educational content, and we also leverage ads a lot. That's the reality. And now we're backed by Redline Labs, so we're part of El Grupo Rojo. So what's this step-by-step that I've been mentioning? What was the blueprint that I followed that gave me so many opportunities that changed my life that other people can also follow? We call that the Dojo Blueprint. It's when you combine contribution, tech mastery, and personal branding, and really you're creating a new kind of developer. It's one with global leverage. This is a graphic that I use a lot. It's in essence what the Dojo Blueprint is. So it has 3 sides. Professional presence, which is networking and personal branding. We have a side of emerging tech, Web3, blockchain, ZK, everything that's trending and at the front line of innovation. And over here we have open source software. So I'm gonna go quickly through what it means when you have certain of those for a developer. So for example, you're a developer that's participating in open source software, but you're leaving out networking and personal branding to the side. You're not really focused on emerging tech or what's new in the industry, what's most in demand. Well, you're really just building without a strategy, right? Without clarity of how fast you could truly grow if you did focus on these things. If you're just focused on professional presence, you're connecting with a lot of people, but you have little skills and really just in general attractive skills that you can provide and value. If you just focus on emerging tech, well, no one sees you building, no one sees you learning, no one sees you growing. And so when you start to mix these things, for example, you're focusing on emerging tech and you're focusing on building your brand and networking, well, you have a direct path a path to the industry, but it's a little slow, and you're at a disadvantage. If you're focused on open source software and growing your network, well, you're building in public and showcasing value, but you're not aligned with what's most in demand in the market. And if you're studying emerging tech, you're learning new things, and you're participating in open software, but you're not building your personal brand, you're not connecting with other people, you're not building in public, well, no one sees what you're doing. And that's the famous case of the one who most deserves it doesn't always get the opportunity. And so the beauty of when you mix these three aspects together, you're building your personal brand, you're connecting with other people, you're participating in open software, you're making very visible what you're doing and your skills, and you're giving back to the software community, and you're focused on emerging tech. That's where true beauty lies. That's where you can truly find global opportunities, and you start to attract those opportunities. You're no longer chasing them. These opportunities find their way to you because you become a magnet. And with this exact blueprint, we've seen devs literally go from anonymous to in demand in months, not by luck, but by following the blueprint and showing the work. Again, I've seen university students enter Dojo Coding, people who have never flown in their lives, and a few months later, they're on a plane to Thailand, to Bangkok, to participate in some conferences. Other people to Brussels, to Argentina. So these are truly global opportunities. Some of them receiving hundreds of thousands of dollars in grants from foundations to kickstart their projects, to really focus on, their curiosity and the hunger that they have to actually build something with so much infra that's available. Because infra needs use cases, and that's where developers come in. That's the problem that we're fixing. And again, it really is just step by step, right? Some people want to become founders. Some people want to find a job, a high-paying job, a flexible, global, remote job. But it always comes down to this. You have to build in public. You have to connect with other people. You have to provide value, and you should focus on emerging tech, which is what's most in demand right now. And so again, Dojo Coding started as a community, a support group, a network. It still is that, but now it's much more than just that. Now it's a developer ecosystem that delivers curated devs, full stack support, and ecosystem activation. So let me just describe the high level of Dojo Coding. Again, we have an academy now, we have an acquisition channel, we're growing a developer network, and now suddenly we have a bunch of talent that is looking to do stuff because they have a very specific mindset installed in them because they went through a whole training process. We call this the dojo mentality, the dojo way, and these guys are hungry to do stuff. And now we can go over to the back end of it, the B2B side, and now we can provide services for companies. We can speak with foundations and help activate their ecosystems. We can set up pipelines for specific types of product. Network effects are real, and that's what Dojo Coding is. It's purely network effects. And so again, going back to the title of this talk, builders are the ones who have leverage, but you need to be able to showcase what you can do. You need to be able to showcase your hunger and desire to impact the industry. And when you do that, you truly have the power to shape the future. We're in a very beautiful moment where coding is becoming faster and faster to build product. With so much AI-driven development going on, there's infinite leverage at the point where really what's only going to matter is how creative you are and the connections that you have. And when you distill it down to why we want to be in emerging tech, we're creating the fabric of the new internet, the open internet, the fair internet, where we all have access to the same type of opportunities. It doesn't matter that we're from Latin America, and that's what's so empowering for people from this region and why people actually care. So what's next for Dojo Coding, right? So I mentioned an academy, I mentioned acquisition channels, I mentioned product building, but what's next for Dojo Coding? We have a crazy vision. We want to take Dojo Coding on chain. Not sure if that's going to be next week or in a couple months. We need to grow our current efforts, but we have a vision. We want to have a Dojo Coding protocol because contribution is reputation. When the community lives on chain, when we have, the actual value that's created within the community from people sharing knowledge, from people helping each other out, from people sharing guides, responding to questions. Having this on chain is infinitely scalable because now we can track this type of contribution. We can have token incentives within the community, and really we can have companies also just tap into that protocol and use it as a mechanism to actually access this type of talent. Of course, it always comes down to incentives. If you have the right incentives, really anything is possible. And so incentivizing knowledge sharing is not just good for us, it's good for the members, and it's good for the broader network that we're creating. So an on-chain vision for Dojo Coding is on the table 100%. And that would be it for now. Thank you guys. Dojo Coding is available for business. If you guys have any requirements or any necessities for developer talent, for services, or if you're a developer yourself, or you have friends who are developers, please reach out. Dojo Coding is honestly a very strong community that will definitely help you on your way. Thank you. Any questions? Go ahead. Great question. Something that universities tend to leave to the side is simply great communication, right? So the ability to articulate your questions, to be very punctual and direct in asynchronous communication. You know, we live in a completely global and remote environment. So the ability to be very efficient with your communication, to be very direct and organized with whatever questions is incredibly powerful, because that's what's going to allow you to actually connect at the global stage and learn from experts from whatever part. And nowadays, it's even more important to just be able to read code, honestly. As we all know, writing code is becoming commoditized thanks to AI, but we need to be able to actually validate and read what the AI is doing to make sure, you know, it's correct, right? So reading code and communicating properly is super valuable right now, especially, you know, when we talk about AI, end of the day, it's, you know, how well can you communicate with an AI?
Hello, okay. Yo estoy más lejos, así que
Dale, dale.
we have a problem here in Panama that's like a shortage of developers. The other problem, like we have a startup community, and our second problem is like developers mostly get hired either remote or from Panama companies to work for them with nice salaries, maybe sometimes even in the third year of the university. So how do you work around those issues if you want developers to participate in startups where they're not going to make any money for 6 months, a year, or something like that?
Great question. Not all developers are meant to be founders, right? But it's really just highlighting and pinpointing the beauty of crypto and the beauty of startup building, right? Some people love just building, experimenting cool stuff. But when you create an environment where you're surrounded by like-minded people who have that same ambitious vibe to them, then it naturally flows, right? Again, the world is so big, there's so many different types of talent. And the talent that Dojo Coding specifically attracts is exactly this type of talent. A talent that's ambitious and a talent that wants to grow, that wants to constantly better themselves, because that's part of the messaging that we do through our marketing, right? So the type of talent we attract to Dojo Coding is very specific. So I guess it's a communication problem.
Thank you, Daniel. That was great.
Thank you.
Thanks, everyone. We're going to take a lunch break. I hope everyone gets some time to nosh up, and we'll see you back here at around 3 o'clock. Have some coffee, chill out. Try to get back before 3. I think we start at... we have some Blockdag swag, some Panamanian coffee, some T-shirts, and some other interesting things in the back. Please enjoy, and we'll see you this afternoon. This evening we have some dancing performances, and we have some continued beverages from our friends at Heineken, and we'll also have a couple other activities happening here tonight at La Manzana. We really appreciate all the support, and we'll see you guys this afternoon. Cheers.